Good morning, traders and investors out there. Welcome to PreMarket Prep, the #1 show to get your morning started right here. Today, we got another great show for you. Of course, it's all about the CPI. Today, we'll be on top of it. We'll give you the expectations the previous month, and we'll definitely be watching towards the tape as it hits, and we'll get the reactions in. We'll talk a little bit about Three Arrows Capital, Unity announcing merger agreement, also some more news in Unity. Fast and all, we'll talk about Delta Airlines. Twitter saga continues. Stitch Fix insider buy, and we got Michael Hewson, chief market analyst at CMC Markets. Welcome to the show, guys. PreMarket Prep.
Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
All right, let's bring on the guys, Joel Elconin and Dennis Dick. Let's take a look what happened in the overnight action. Sup. Ooh, the old mute trick. The old mute trick, Joel.
He hasn't done that for a while.
The old mute, my friend.
He's still muting.
The creeper rally is what I was saying.
There he is.
Up
The
13
creeper.
and a quarter handles that little bounce that we got at the end of the day. We're getting a follow through. The shorts maybe just wiggling out here ahead of the big CPI report. Not much to report on the upside because of that crazy rally we had to start the day yesterday, all the way up to 76.50. That's your next daily high. Crude, we did trade in the 93 handle, 93.67, but now we're up 35 cents at 96.19. Gold up 240 at 17.27.20. What else do you have? Silver, man, that can't even rally. That's still in the 18 handle. That's down a few pennies here. Bitcoin, that's up 460 at 19,775. And you got a support level there that will it hold or not? We'll see. And Ethereum futures, they are in the green as well. Just a little bit more on a percentage basis. They're up $40.50 at 1,078. So Triple D, is that you out there trying to wiggle out of some shorts ahead of the report?
That's what's happening here.
Yep.
You're seeing a little bit of like, okay, let's cover our shorts before the CPI just in case, because shorts have been rewarded for the last 2 days. Obviously, S&P trading up, or SPY trading up over 390, losing 100 handles 2 days before the report. So I think you got a few nervous shorts this morning that's saying, you know what, let's lock these gains in. Let's get neutral just in case, this number isn't as hot, just in case the market expectations, to it might be different than what we're predicting. So that's what I anticipate, is happening here at this moment. A lot of jockeying for the next 26 minutes. But all that is going to matter today is that actual CPI number money. Mitch, can you preview this for us?
Of course, let's dive on in. I'm going to give you guys everything here, and you'll also see on the bottom the June kind of numbers, expectations here. I'll run through it. For June overall, year over year, it's 8.8. That's the expectation. Okay. Previous month was 8.6. So what we're going to be watching, does it come in hotter than that 8.8? Does it come in lower? When we look at the important number, at least what you're hearing out there is the important one, is the core CPI June year over year. That's expected to actually come in at 5.8 expected. And this was previously at 6%. So I think this is the important. This is actually showing a slight tick down in the core CPI number. Then when we get to CPI June, month over month, it's a 1.1 expectation. Previous was at 1%. So just a slight tick up. Core CPI is actually expected for June, month over month, at 0.6. And then previously it was at 0.6. So this is interesting that the year over year is expected to tick down, but the core CPI for June is actually expected to kind of stay the same here on the expectation from the previous month.
The market, and obviously, they said that's unconfirmed leaks, but it's been leaking the last couple of days. They're thinking the number's hot. So, rumors are 9 handle. I didn't hear 10 handle, Mike. 10 handle would be an implosion in the market.
Boy, yeah.
I think if you even see a 9 handle, I think the market's going down. ML asking great question with the the recent sell-off. Isn't a lot of it priced in? I think still the market wants to see, I'm going to say it again, that the Fed's plan is working in that. We're paying the price by having these higher interest rates. We've got to start seeing results sometime soon. If we don't see at least some results, and I think at least come in at expectations, don't start going hot again. So I think we need to come in under 8.8. If we come in 8.1, 8.2, I think the market can rally. We come in above 9, I think the market sells off hard. So I don't think you can price it in ahead of time. I think there's some nervous Nellies that are covering here into this. Obviously, the market's sold off. I have no idea now. I was going to come in long to this, but because of the expectations and because of everything, I'm market neutral. So this is just a coin flip here. I don't know what to think. I know eventually these numbers are coming in, but I don't know if it's going to be this month.
This month or next. I think, I don't know, and I'll go back to the silver lining. I mean, I've run through the commodity prices. I mean, there's no doubt that you can say the commodity prices have come down since their June peaks. We did this exercise before, but if we talk about June 13th, let's say they take it the first 2 weeks of June, crude, up near the highs of the move. Let's just run down. Even the grains up, corn. You look at that June 13th, 7 a bushel, now 6 a bushel. Wheat, I mean, they've come down. So my expectation is that if it does come in hot, then I think they buy the dip. I really do. I just don't think we're going
I
to
hope you're right.
Yeah, that's what I think, because they gotta,
That is
talk with Blue.
interesting
We'll
perspective.
talk with Blue about tomorrow. And if it's super good, they'll have a rally, and I think that I don't know if it will be like that day in November when Pfizer came out with the vaccine, one of those crazy days or not, but we'll see. All we can do is wait and see. But let's hope it comes in a little bit lighter than expected.
We'll see
it's
what
scary.
happens.
I'm actually nervous. I'm never nervous, but I was nervous on the last CPI, and I'm very nervous on this CPI too. I will be leaving you about 3-4 minutes before 8:26 to go prepare for whatever fireworks we're going to see, and it is going to be wild. But there's stocks to talk about beforehand.
Yeah, let's get to it.
We're 20 minutes for the number. Let's jump into a few stocks here, Money Mitch.
I'll bring us into Unity here. I do want to comment, though. I think it's an interesting comment there by Joel saying that it comes in hot and they buy the dip. That's a conversation I have not heard anybody mention.
Yeah,
yet.
I don't know if I'm on that either. I think it comes in hot. I hope I would love to see that. I want to see the market stabilize. I'm a long-term investor in the markets. I want to stop seeing my long-term portfolio, my retirement account going down with all these, Apple and Qs and obviously Amazon now back in there. I sold my Microsoft, but I still have a pile of stocks in that long-term portfolio that continue to go down. And, and I have added to a couple, we know I've added the Marvell. So I have, put a couple other stocks in there, but I'd love to stop seeing them go down, start to get some relief going to this market. I mean, the trading environment is great when you get the volatility, but long-term investor hat on, let's see some stabilization here. So all right, I'm scared though.
Let's dive into some of the growth names out there today. Unity getting information here coming out. They announced a merger agreement with Iron Source, an all-stock transaction valuing Iron Source at approximately $4.4 billion, representing a 74% premium. They also authorized a share buyback program of up to $2.5 billion. They did reduce their full year 22 revenue guidance from $1.35 billion to a high of $1.42 billion to now $1.3 billion and a $1.35 billion on the upside. So reducing revenue guidance, authorizing a share buyback program, and going for a merger in one day. That's a lot.
That's a lot of news. The merger would have knocked them down. The reduced guidance is always going to knock you down, and the buyback isn't going to stem the tide. So Unity down, deservingly so here. lots of support down in the 30 area. That's a long ways away
Yeah,
here,
a
Mr.
long ways
Elconin. Maybe you can
away.
find us a level earlier than that.
Yeah, let's see what we can do here. Let's just throw 36 out there for fun. I
Sure.
see you went to 35, just
Yeah.
above 35. That looked like a little bit of a knee-jerk reaction. But if I go to the dailies here, and I got to see a couple lows in the same area, and I do right around 36. So that's 87 cents away. So I'd call it, if you can't get this in the 35 to 36 zone early on, then I think you get a little bit of a rebound. I mean, if you feel like you missed a move from 30 to 48, right? That's an 18-point move. 9, you're well below the 50% retracement here, which would have been 38, 39. So let's see how 35 to 36 area. After that, it looks a little bit tight down. I don't think you're going to see 32.82. That was your June 17th low.
Okay, let's
Moving on.
yeah, let's take a look
Iron
here.
Source. I mean, why did this company go
Yeah, we can take a
public?
look. That's
I mean,
IS.
look at this thing. $13, and now it's getting taken over at 2 or 4.
This is the problem, Joel. And a lot of people don't realize that too. They sit around and you wait out, and I'm not saying they were waiting for takeovers in this, but like people who have been waiting for a takeover in Peloton. You could eventually get that, but maybe it's gonna be in the stocks at $2 and they take it out at $3. So this is the issue. And obviously, everybody, who bought this thing in the last, who bought this thing pretty much ever is losing money, except for the people who bought it in the last, month. So, or a couple of months, I guess. So it's a windfall if you bought in the last couple of days. Congratulations. But a lot of bag holders in this that probably are not applauding, realizing all of their losses.
Exactly. All right, let's move on. Earnings,
Let's
maybe.
move on. Let's go towards the earnings. Let's go to Fastenal here, coming in with their earnings, and Q2 EPS at 50 cents in line, and sales actually missing here at $1.78 billion, missing the $1.79 billion estimate there, missing by a slight little bit there. We also got news from mortgage applications, right? Mortgage applications to purchase a home fell 4% for the week and were 18% lower the same week 1 year ago. And this is according to Mortgage Bankers Association seasonality adjusted index.
Housing continues to be a mess. We know that. Fastenal, obviously the nuts and bolts, the literal nuts and bolts that go in everything, into housing and into cars and into everything else. Fastenal, great name, great company. Will it eventually rebound at a certain point in time from a certain price? Sure, but now you're breaking down to new lows, which is always scary. I think the next major support is 44 to 45. I mean, but this is a housing play. And some of the housing stocks have bounced. That's the good news. But they've really, if you look at where they've come from, you can say they've bounced. But I mean, KB Home's $55. Now it's $30. It's just been hit. And this is, a direct result of Fed policy, which had to happen, trying to bring inflation in. So Fastenal, direct hit by aggressive Fed policy. And this is showing up here now. And is it going to turn, after a few months? I don't want to be early on this one. How I'm always early on trades. I don't want to be early on this one. At the same time, I can see great support down there, 44, 45.
Yeah, I mean, as much as that little rosy scenario I gave you with the commodity prices coming down, this is a gut punch. This is not what you want to see from the nuts and bolts of the economy, making a new low of the move.
But almost expected, Joel. I mean,
Yeah.
you kind of think about, is Fastenal going to kill it in this economy? So I would say that's the only good news is, you see the knee-jerk reaction. How about what's going on at Fastenal? But think about it. It was probably obvious that this wasn't going to be a great quarter for them. So maybe the dip does get bought for that reason. But again, the only thing that's going to matter is CPI. So, I mean, I think the dip gets bought if CPI number comes in. If it comes in hot, nothing's getting bought today.
Mm-hmm.
Let's apply your Micron theory to this one.
Yeah, good one for sure.
Yeah, and see if it can rally on
bad news.
Well, it's an inline report, but I just think you got some nervous Nellies out there. So not a good sign for Fastenal. What gave you a nice setup ahead, man? Someone was really wanted out ahead of the report. $51. That's in the rearview mirror now. But let's see. long way from yesterday's low as well. I think Dennis, we may be seeing if a hot CPI number. I think over the next couple of days, you may be seeing that 44, 45 area.
I was still leaning into the number potentially being light, but with all these, leaked expectations and stuff, it's got me spooked. So I've come off that and I'm just like neutral. I'm not going that I'm betting on it being hot because I was feeling the other way before, but it's brought me to the point where I don't want to bet ahead of it. Let's see what happens at 8:30. Somebody's saying, what's your plan at 8:30? Well, let's see what the number is. And if the number's, the nines, I'm probably going to be selling stocks. If the number's obviously light, I'm going to be trying to buy stocks as quickly as possible, along with all the algos in the world. So we'll see what happens. There could be, if it comes in wishy-washy, we've talked about that too. Comes in line, you almost got to sit back and then just play the head
if
fakes.
line, everyone will be. But I'll tell you what. And the other thing on my concern list is these banks. I mean, come on. Rising interest rate environment.
Don't
look at
get a bid.
Yeah, they cannot catch a
Cannot
bid.
catch a bid.
Look at that
recession.
Yeah.
And the European banks too are not helping them. We've had this conversation pretty much every day.
How's DB still around? Still don't understand this.
Well, if they're not around, there's going to be major problems because these banks are in bed with everyone. It's contagion. We saw that back in 2008. You start losing one big bank, and all of a sudden, all the other banks are in trouble too. Kind of like what's happening in the crypto world. Same type of thing. I mean, it's a contagion there. You get one, they'll run in banks and running on the crypto, and Voyager goes down, then another one, and I mean, it's just been kind of a mess.
Careful, Dennis. Careful. We don't want to be.
Oh yeah, we're not supposed to say anything bad about Bitcoin. I didn't even mention Bitcoin.
Hold it. I'll tell you one thing. They've been paying up to fly. Did you see Delta's Airlines earnings here? Let's transition over. It looks like they posted a quarterly profit thanks to, travelers willing to pay up more to fly, passing down the costs. But the EPS here missing at 144, missing the
making money
$1.64 estimate. Sales were at 13.82 billion, beating the 13.4 billion estimate. They did note that capacity was down 15 to 17% from 2019 levels.
I mean, it's good news that they're making money again. That's the good news. The bad news, obviously, is that I think going forward, demand destruction is going to happen in this industry as well. But with that being said, Delta, nice day ahead of the earnings, the pullback. Maybe we can pull the micron here, Joel.
Yeah. I'd love to see this at 28, or if you're taking a poke here, that's your level. That was 2 months in a row. You bought them at 28. Good day yesterday. Still $2 away. I heard the CEO on. And I don't know if I heard him correctly because I don't listen that close to CNBC, but he said they hired 18,000 people or something since the as of late. That seems like a lot of people, but they're trying to get pilots. They're trying to get, they're trying to get people, to work. But just technically speaking, to see what happens, if you're taking a poke here, the real support is at 28.10, I believe, the low of the move. And if you're looking for, you're not even at yesterday's low, Dennis. You got in the pre-market, you pierced it, but
I think the dip could get bought here.
Keep an eye on 29.22. If you don't get 29.22, that's splitting the lows in the last couple sessions.
Sure.
Oh, wow. 29.18 too. Let's see what happens in the lower 29 handle.
I think the deal I think Delta could get bought. Again, though, we got to take it right back to the CPI. In 11 minutes, we're going to have so much more information. It's hard to make bets 11 minutes ahead of the biggest number of the year. So
I'd even go bigger than the year. I'd say
bigger in years.
Years. You remember when the unemployment numbers were coming out during COVID, and they're like, just ripping higher.
This is more important than that.
I know.
Mm-hmm.
I know.
This is the most important number. You're right. We've seen in years. We need to see the Fed's plan start working. I'm so scared that it's going to be hot or not. That's the question. That's the only question that matters, and all it applies to is all these stocks we're talking about. It's the same thing. We got to bring it back to it. It's the only thing that matters today.
Yep. CPI report reaction coming up soon in about 10 minutes. So just keeping that in mind for Dennis so he goes wide.
Very wide.
Yeah, definitely. Let's continue going to the Twitter saga as Twitter is suing Elon Musk to enforce original merger agreement. Twitter said Musk, after entering a binding merger agreement, now refuses to honor his obligation to Twitter and its stockholders because the deal he signed no longer serves his personal interests. The lawsuits filed on Tuesday marks the beginning of what could be a long legal battle for to hold Musk to his deal to pay $54.20 per share for the company.
Everything is a game to Musk. I mean, he's, some of him, he said this before. Part of him believes that his whole life is just a simulation, that all of our lives are a simulation. And if you really believe that,
Dennis,
you're just playing in a video game and you're going to have some fun. So everything is fun to him. Like, this is fun to him too, that, they're going to take him to court and they're going to sue him. You can see his tweets. He's having fun with this. This is just another day at the park. So it's crazy. Like, somebody gets sued, thinking, well, this isn't good, but is that going to hold up in court? I mean, I think Twitter has a case. I think they have a case. He signed a deal to buy this thing at $54.20. Just because you change your mind doesn't, or because, these bots, he had his due diligence too. So I think there's a case here. I think the saga is going to go on for a very, very long time. I think the risk arbs are pricing it in here around this $35 and say, hey, if Twitter eventually wins, there's almost 20 points upside here. But if they lose, it's probably $20 stock. So, I mean, it sits there at 35 to 40, maybe for the foreseeable future. As we get more information, it can move. But, maybe there's going to be a settlement. Maybe something else is going to happen. Maybe it's going to buy it at a lower price. But at the same time, it was obvious they were going to sue. And I think they got a case.
Yeah, getting a little pop. Could someone please explain to me why? Okay, so I have Twitter on my phone, right? I look at it occasionally. I don't follow Elon Musk, okay, and I really
you have to follow Elon Musk. He's the funnest guy to follow, Joel.
You don't need to. That's what Joel's relating to. I think.
Okay, go ahead.
Yeah, because and then it says based on your likes, but I don't like anything on Twitter. So I get his tweets.
The bots are giving you,
and the bots are really, and I'm like, come on, give me a break, And then like DraftKings, I've never even been on the DraftKings or Penn or Barstool.
You like sports though.
But
whenever you're searching around at sports, they advertise DraftKings.
Oh, because I go to Bleacher Report.
Yeah,
oh,
anything you go to sports, then they're obviously cooking you and they're looking at you. And they say, you're a sports fan, we're going to advertise DraftKings to you.
But I'm not on my tweet deck. I don't get that crap. I don't get that. I don't get all that stuff. It's on my phone. It just drives me. I can't even look for, Dennis's tweets that, where people are picking on him and stuff.
I just look at
that's what I want to see.
Picking on me.
Yeah.
I get picked on all the time.
And I'm like,
they're picking on me again.
I think you like it, Dennis. Don't worry.
Part of me does. I can't help it. Kramer loves it. I mean, he, gets on an antagonizes
Supposedly,
everyone.
he called the bottom today. So just be careful.
Oh, he called the bottom? Oh,
yeah,
gosh.
I saw that in the chat. That scared me in the overall market.
Hot number incoming.
Oh, God. Hey,
it's a very gutsy call to make any call here.
Yeah,
6 minutes before the biggest
playing the hero
in
for
years.
sure.
I'm getting like the butterflies and the nervous. I never get that. I traded for 23 years. I don't know, just do it. I'm like, right now, I'm nervous.
It's because you follow me, says some thinking about it. But I don't even follow Elon either. I agree with Joel. You don't even have to. It just shows up anyways.
Oh, yeah. You can't get away from him. What if Twitter blocks him? Like, what if Twitter closes his account?
That would be the move. That would be the move.
He'd be mad. That'd make him mad.
If they just blocked him or deleted him.
What? Well, they delete Trump. Here's a guy you're suing, and you're going to let him still talk trash about you on
the actual
your own platform. Yes.
I think that they should can him. Honestly, if I was a Twitter board, I was like, enough talking trash about us on our platform. We're suing you, and you're done tweeting. I don't know. I would do it.
Hit him
I guess they like that.
Hit him where it hurts.
It almost seems like he wants to lose money. Just like
how's DWAC been doing? How's DWAC been
and the chat is right, and the chat's all over. We have a smart chat. If Twitter blocked Musk, DWAC's flying. for
That's
sure on that. I
that's-
agree.
what
So
they're
there's
talking about in
trades
the
here.
chat,
That could
so-
happen. You know, we're anticipating that could
Hey.
happen. D-Wack would fly off that because he would jump over on the Trump platform for sure. Yeah.
Well, we got to stay ahead, and I will go ahead and just give Dennis the warning again. 5
Oh,
minutes.
gosh.
5 minutes.
Deep
Almost
breaths.
there.
Breathe in
Deep
deep
breaths.
Hey,
with
Dennis.
me. In through the nose, out the mouth.
Okay. I go Bank America, I go JPM. I mean,
Those
you
could
know,
all move like opposite sometimes too
I
on
know,
these numbers.
I
but
know.
I think
That's
everything's
the
going to move
hard part
together.
there.
Hot.
They're
Not.
buying, they're getting in there, they're buying at the highs of the pre-market set. And you know
Get
what?
the countdown going in the corner.
Right?
Yeah.
I should have a
240
countdown here.
seconds. 230 seconds. Let's go.
But
Let's go.
I better go wide early just in case my orders
just
cancel
to
for
let
some
you
reason.
know, Dennis, we're about 30 handles from yesterday's high. So if you think that there's and we're about 30 handles from yesterday's low. So there's
Oh gosh.
there's
Hey,
nothing in
Hey,
there.
there's some more saga news out there. It's not the Twitter saga, but it's the Spirit Airlines saga delaying
I
again.
never
the
want to hear about
shareholder
Spirit
vote.
Airlines ever.
Yeah, now you
These same
Kick it to the
stories don't go
side.
away. We're going to hear about Twitter and Musk for the next 2 years.
At
We're hearing
least.
about Save every other day with JetBlue, the trifecta, the love triangle. Save, JetBlue, and Frontier.
Oh,
Oh
man.
gosh.
It's going to
the
bring
same
it,
thing.
it might rival the Josier Banks Men's Warehouse.
Yeah, I remember
merger.
that.
They
Oh,
were
the
going to
love
one's going to buy
triangle,
one
too.
and
The
the other
love
one's going to buy
triangles.
other. Oh my gosh.
And you know what? In Twitter, they could do the love triangle with DWAC too. So I mean, there's all kinds of possibilities here.
Yeah, but okay, 827, Dennis. Any?
They got
give
me scared. They're like Toronto Dave said. Let's hope Rogers doesn't drop in the next 3 minutes. I'm canceling. All of them now.
Yeah,
I cancel them all. Getting out ahead of the Rogers
Dennis,
drop.
give me if it's a hot. Just give me. I mean, I
Yeah,
got the banks and I got the growth and the value, and of course I'm going to.
What's a number that scares you? Yeah.
No, I don't look. I don't look at the number. But Dennis, what other stock? What's your first? If it's a good,
I got 30 seconds to talk.
Go.
I'm leaving. I'll talk to you about this after. I'm going to hide in the background and probably. I'm not getting picked off. I tell you that much because I have no orders out there right now. Don't get picked off, folks.
And if you're
going to use stops to try and catch this, go with stop limits. Because
no stop orders in the pre-market.
Well, there are in futures, Dennis.
No, yeah, in futures.
Yeah, got you there.
Pre-market.
Don't do all that futures. That's that Joel.
Use stop limits. Okay, we're gonna change the interval.
Let's go. Let's get this
1 minute.
excited.
Oh, you guys know I never go to the 1 minute chart here.
The report's coming. It's coming, guys.
Did you see that little rally when we started the show here? And we were like, oh, there's sure. I'm like, well, we better quit talking about the S&P's going up here. All right. There's always someone that jumps the gun at someone gets the information. I got 828.37, but in my opinion, someone gets the number at 829.50. I really do, because it's so like the spoos are, the people with that, the pipes, going right into Jerome Powell's office or the CPI office or whatever. Well, you know what else we should probably look at here? If we do go into a retreat, since I have nothing in there until yesterday's low, just let me check mid-range on the session.
Oh, I'm watching to see when it hits the tape here.
No, I'm not going to do mid-range on the say because I can figure it. Okay. The Bulls and the Bears. Pre-market high 43.75.
20 seconds.
Here we go.
Dun.
Okay.
Everybody's in limbo waiting for CPI.
The algos have the number right now. Good number. It's soft. Oh my gosh. Look at that rally. Look at that.
We'll see.
I think, unless someone just jammed it. Someone jammed it ahead of it. Now
it's
it went
taking
up
a little
to
while
73.
to find
No,
here.
It's a bad number. Someone jumped the gun.
There
Look
it
at
is
that.
here.
It's bad.
All right, I'm pulling it
really
up here
bad.
now.
It's like 9. It's 10%.
All
Oh,
right.
someone got
Let me share
smoked
my
on
screen
that.
here.
It's bad. It's really bad. Holy mackerel.
All
Why
right.
did someone take this up to 38.73? Holy mackerel. It's a rout. What do you got for me?
Increase 1.3% in June. So the expectations again for June were it was at a 1.1. We came in hot at 1.3. That's month over month. I will get this up, but I'm literally pulling it from the economical release here because some of the other ones are a little bit slower there. Now I got the
Okay.
year over year 9.1. 9.1. That's hot, guys. That's hot.
Yep.
Definitely the core coming in hot there too. Month over month, just slightly, and then also year over year, 9.1 versus the 8.8. So there you guys have it. Looks like it just did that swing. Looks like the algos got faked out a little bit there,
Oh
Joe.
my gosh. You know what? Sometimes I try and put, some orders in to, try and catch the move. I would have gotten absolutely smoked on that because if you would have tried to buy it on a buy stop, you're getting absolutely killed. Holy mackerel. What a dump here. We are through
Giving you
yesterday's
guys
low, 38.0475. Wow. What a head fake,
core
man.
core number coming in here at zero point 0.6. It was a 0.58. Remember, it was 0.6 previously. They were expecting it to come down there. The focus was on the core CPI number. Could we get that to continue showing us at least a little bit let up? And no, we did not get it.
No, not at all. Let's see here. So, what do we have? We have nothing in here under 38.0475. So, there's going to be no chance of a rally until we get back. If we can get back in the 3800 handle, 38.0475. Yesterday low is now is going to be resistance. So, I just imagine we'll switch over to the stocks here, and I imagine everything is getting killed,
All
huh?
right, pulling from the actual release
Oh,
here,
okay.
the economical release. If you guys want to read the economical release and get around the news kind of reporting, I will give you guys that link right now in the chat. This is from the Bureau of Labor Statistics, so you get their actual release versus reading in the news on what they're trying to have you look at. The increase was broad-based, with the index for gasoline, shelter, and food being the largest contributors. Of course, we expect that. The energy index rose 7.5% over the month and contributed nearly half of all
Oh,
items
boy.
increase, with gasoline index rising 11.2% and other major components index also rising. The food index rose 1% in June as it did the food at home index. So there you guys see it. Still food and energy continuing to drive us in this kind of 9.1 increase for the 12 months ending in June. This is the largest 12-month increase since the period ending in November 1981. So there you guys see it. I can show you guys a little bit more here. I've been wanting to kind of show a little bit more here instead of just talking and pulling up numbers here.
Right.
I'll
I
show you
mean,
guys
really,
here.
the only thing you really need to, the only thing that really matters is
So
the market.
you
Yeah.
see
I
that
mean,
9.1 here on the top, right?
yeah, it's hot.
Food at that 10.4. You can see it here and how it's been seasonally adjusting here. I think this is important to kind of watch, right? What is showing signs of coming down? What isn't? And so I think it's something that you guys can all take a look at. I included that. That's that link that you guys see there. So take a deeper dive into this and we'll see what happens. How's the markets now, Joel?
Man, what a reversal. We've had 112-point range here in 4 minutes. Now, I don't know what algo did what to take this up to 38.73, but they just wiped out the book and then they digested the information. I don't know how much volume traded up on that. But as I said, wide market here. And I even have this on my sheet, and we'll see if it comes into play, is right here. And I had this line on here yesterday. And boy, it sure feels like we're going to get down there now. Look at this. You had three lows right here. I mean, we might even be down here before the end of the show. Three daily lows at right in the same area, 37.41 and a quarter to 37.44. So there's 3 daily lows, June 30th, a little bit before the 4th of July rally, June 30th, July 1st, and July 5th. So that's 23 handles away. That's what you got to keep an eye on. And then I gave you yesterday's low is resistance. Looked at Bank of America, and well, it's down 19 cents net here. But it was much higher. Let's get the actual. Let's get the stocks in here, 24-hour market. So I mean, the net doesn't look that bad. It does look bad if if you bought it on that spike up to 31.65. Let's get the other thing here, and then we'll take a look. So what I would do is if you're thinking of buying the dip today, which hasn't materialized, look what corresponds to those 3 days that I mentioned. And Apple, did it have that didn't quite have the same pattern there, right? I said the beginning of July. Nope, Apple chart is not as clean. They still got a long ways to go to get there. Microsoft, really bad day yesterday. Microsoft, that got to that area yesterday, is trading down another $5. So horrible relative performance here. I guess no one cares about the Google split anymore. That hasn't traded much. It's down $60. So I believe the split's coming tomorrow. Amazon, let's see how
Splits the
far away it
15th,
is.
not tomorrow, just to kind of
Oh, it's the
clarify that.
15th? Okay. Um, Amazon, I don't know. I mean, the low of the move is way down there at 100, but that area I'm talking about, uh, back at the end of June, end of July, those lows. Next one that comes in, 105.85 there for Amazon. And here, let me get rid of the 1 minute chart because we're going to go back to the 15-minute chart here. I gotta imagine that Kathy's stocks are getting pummeled here, and ARC down to $1.66. So we all know where the support is in ARC. That's down at that $40 area. Another 266 from where we're currently trading. Warren's doing okay.
When
Warren's doing a little bit better than the market.
when you want to be right, but at the same time you want to be wrong, Joel. I think this is definitely one of those reports where I was right, but at the same time I did not want to be right
It's the
because
timing.
it hits my pocket too. I mean, but
No.
I think this confirms, right, at least the thinking that it's probably taken a little bit earlier in the month, maybe the first 2 weeks, and that's why we didn't see the downtake. I think next month will give us maybe the confirmation of that. What do you think, Joel?
I think that what you were spot on with that, and you said that if the data is taken early in the month, right? Then you saw where those commodity prices were. So if it's taken right now, I mean, I'd love to see it what it is right now, but
It's
with the
hugely different, right? I
yeah,
mean,
yeah,
the difference now is massive in compared to July. If you look at, let's say, like right now, we're in July 13th, right? Where are those prices at right now compared to
I
a
know.
month ago? Huge difference there, right? And so, at least in my eyes, this points to at least next CPI, I will be on the opposite side. I won't be on the hot side. I'll be on the low side, and I think it's going to come in extremely low. But we'll kind of get there
Yeah,
when we
but
get there.
how much damage can be done, between
In
now
the
and
meantime, exactly,
in the next month.
and this is something definitely to watch. Probably what Dennis is watching right now. He's definitely trading, and he'll be back when he can join us. In a few minutes, we should be joined here by Michael Hewson, Chief Market Analyst at CMC Markets. But Joel, we can go ahead and take a look. Maybe how did the banks react? Did you take
Yeah,
a look?
I looked at that, and they've already been in the gutter, right?
Mhm.
So on a just relative basis, this is holding up okay, down 20 cents. The low from yesterday is 30.98. So that what I was looking to see in this one is if the buyer's at 30 and a half, we're going to step up to 31. Or the $31 area, and we'll be finding out shortly here. So 30.98, but this didn't perform either, right? I mean, really not much, didn't participate hardly in the rally. So let's look at that. Let's see how JP Morgan is performing here. That's down 12 cents. The other thing you got to think about these companies is they have earnings coming out this week. So that's important. JP Morgan, not it yet. Pair of lows right there. 112.22, 112.26. So maybe you don't have to stick your nose out there the first time, but if you get a lower open, boom, and then you come back down up through that area. So the banks are doing okay. Okay, maybe all right. Mitch, maybe I sent hold on for 1 second, Mitch.
No
Take it
worries.
away.
You can work on that. I'll go ahead and I can take even the charts and kind of you can go in the background here. I can work on that. You work on our guests here. I'm going to continue to watch kind of the data there. I was looking through it to see if there's anything that stood out to me. And you can see here, look how this fuel one keeps kind of moving up. The seasonally adjusted from the preceding month was at 4.1. In June, this jumped to 11.2. So this is what's really kind of driving it is the energy one, at least from what I see. You know, food is up, but it's not like a massive difference from June and May. So at least in my eyes, where we saw the increase was from that gasoline pricing going skyrocketing up. So keep that one on your radar. We'll continue to watch what happens here. And I think we got a good question in the chat. I did see Aaron Brian ask about what sectors should we be watching that might be less sensitive to the CPI data. So let's take I think we could take a quick look at just like what has been working there, right? And so I'll show you guys my chart here. You back, Joe?
Yeah, I'm back. We'll have Michael in a second here.
Perfect. What sectors do you feel will be less sensitive to the CPI data?
Oh man, that's tough.
It's a tough.
I mean,
tough
right
question.
now, right now it's it's going to be a risk off day, right? And so I'm looking at Johnson and Johnson. Who wants to buy that? That's up 13 cents. So maybe you're more
What
conservative
about
stuff.
what about that? What about Moderna? Remember we were talking about yesterday. There was a setup there. How do you
Yeah,
feel? How do you feel? At least what is it doing now, and what do you feel about this chart?
170. You guys, I talked about this at length
Boom,
yesterday.
standing
So,
out.
yep, let's bring on Michael.
Let's do it. Let's get to it. Let's bring on our guest today. We got Michael Hewson, Chief Market Analyst at CMC Markets. Welcome, Michael.
Good afternoon, or should I say good morning, guys? Well, that was a hot number, wasn't it?
Oh, there it goes.
Yeah, and I can remember last time we had John. You were warning us of this and what you were seeing over there, and you've had a little political turmoil going on there too. But just
a bit.
yeah, just let's just comment on the number here, and we were trying to be optimistic, but when it you look at if they took these commodity prices in early June, then hey, you're not surprised at this. It's something that we talked about. So you think that people are gonna bite the bullet here and try and buy the dip, or we're just gonna be under pressure for the next month until we get the next round of data?
Well, this is the thing. I think one of the things that struck me about this particular data point, Joel, is the fact that it's gone in completely the opposite direction to PPI and CPE, because on all of those measures, easy for me to say, the data's been in decline, and the core measure fell from 6% to 5.9. Unfortunately, people need to eat, they need to drink, and they need to drive their cars, and that has basically been the biggest. That's what's caused this jump to 9.1%. And I think the bigger concern going forward is whether or not we're going to go any higher. Now, you look at commodity prices over the course of the past few weeks and months, they actually have been coming down. So, silver lining, I'm hoping we're close to the peak, but obviously you can't rule out companies starting to pass on price increases. And that is why we've seen, I think, this big jump in CPI this month. I think companies have bitten the bullet. They can't hold off price increases anymore. And that is what you're seeing played out in the headline CPI.
And what
Well,
about, just coming on top of Q2 earnings season here now? I mean,
Uh,
you think is there anything you think from the earnings season that, or, is this is just going to dominate, the headlines and just
I
set our
think
fate here for the next month?
I think the market's in denial about this earnings season. I don't think that. Um, I think they're going to be in for a rude awakening, and I think as a consequence of that, I think we could well see further weakness in equity markets more broadly. I think starting tomorrow with JP Morgan, they made provision at their last set of numbers for higher inflation. I think they're going to have to do that again with this month's numbers, simply on the basis of the fact that at the end of Q3, at the end of the last quarter, which I think was their Q1, inflation was around 3% lower. So you've got to price that in. You could find that there's an awful lot more consumers that are going to be struggling with their finances.
Anywhere to hide, anywhere to hide in this market.
Well, not at the moment. I mean, defensives, utilities over here have taken a bit of an uptick. So you're really looking for income stocks. You're looking at defensives. So yesterday we saw a big rally in utility providers. So companies like National Grid, for example, which supports the infrastructure, the power infrastructure, not only here in the UK but also in the US. They've seen a bit of an uptick in their shares. Localized power providers over here have seen a bit of an uptick now that the government has decided that it's not going to impose a windfall tax on them. And we've also seen some fairly decent gains in the like of AstraZeneca and Glaxo. Though I do have concerns about Glaxo because they're spinning off their healthcare division. I think next week, Haleon, not the healthcare division, the consumer foods division. It'll be interesting to see whether they get £50 billion for that, which is what Unilever bid for it at the beginning of this year. I think they'll regret not accepting that bid now.
How about well, let's go to the energy sector next here. Boy, oh boy, under pressure here. This certainly it doesn't bode well for oil here. Do you have any projections on the oil patch?
Well, you look at Brent crude and you look at WTI, and it's at the bottom end of the range that it's been at for the last 6 months. So for me, I think while it's holding above its 200-day moving average, if you look at a continuation chart on WTI, you look at the lows. I mean, maybe you can pull up a chart of that
Sure.
and show your viewers. You've got a fairly decent area of support all the way through from the bottom around about March all the way to the lows earlier this month. And you've got the 200-day moving average as well. So I think there are concerns about demand destruction, but you've also got on the flip side of that supply. If we break below these lows here, around about the 200-day moving average, then I certainly think there's potential to go lower. But it's going to be a very, very tough call to do that when you've got all of these supply constraints going forward. So we'll have to wait and see on that. I'm still by the dip on oil.
Okay. Go ahead,
How
Mitch.
does the Fed react here, Michael?
I think it's a big ask for them to change guidance from 75 basis points to go for 100. But I can guarantee you people will be suggesting that we go for 100 in July. I think that would be a mistake. I think 75 is nailed on now. And really now it's a question of whether or not we get 75 basis points in September. And I think an awful lot of that will depend on the data that we get subsequently. I think let's look at tomorrow's PPI. I think that could give us a good indication as to whether or not we are starting to see a fade off in some of the more forward-looking indicators, because I think PPI is a good guide to what's coming down the pipe, and also potentially, the PCE numbers later next month, the latest PCE numbers, because again, they have been showing signs of softening. I can't help thinking that these two CPI numbers could well start to tail off as we head into Q3.
Okay.
Time will tell.
And how about those European banks? I mean, they just recession all over it. Deutsche Bank hanging out near and slow the move. Any comments on the European banks?
I wouldn't touch them with a barge pole, Joel. Really, I mean, if Russia cuts off the gas, Germany is in a whole world of pain this winter, and I can't see any solution to that particular problem for them. In fact, I think they're already talking about gas rationing in Germany. We've had landlords in Germany turning down the heating in their apartments or turning down the electricity, the power in their apartments, simply on the basis of the fact that they're concerned about supply, and we're not even in winter yet. So I find it very difficult to be optimistic about the euro area at this point in time. They're paying the price of Angela Merkel's chancellorship and cozying up to Putin. And it's not as if they weren't warned. They were warned in 2012 when they decommissioned nuclear power that this would be a consequence of that. They chose to ignore it, and I don't have an awful lot of sympathy for them.
Okay, all right. Is there anything that anything that you would look at, let's say, between now and the next the next report? I mean, you talked about the energy stocks. I mean, if people can afford to pay their bills, the gold and silver in the tank. I never asked you about cryptocurrencies and
I don't like
Bitcoin.
cryptos, Joel. I do
Okay.
not like them at all. It's not something that I would look at. I mean, obviously that 20,000 level, we've traded around it. I mean, in an environment such as the one that we have now, I think the last thing you want to be is in Bitcoin. The volatility alone will kill you if you don't have deep pockets. And unless you can afford to actually sit on it for, say, for example, the next 5 or 10 years in the hope that it will go back up, I would steer well clear of it. I certainly discourage our clients from trading it simply because they just blow their accounts up. The volatility is too great on it.
Michael, of course, it's been on view from traders is the dollar, right, and the euro. What do you think this situation expands to? Do you see it keep going up, the dollar?
I do, yes. At the end of April, I published a piece on our website called Euro Parity Anyone? ? And that was when it was around about 105. I think we can go to 95 by the end of the year. And that's purely on the basis of the fact that unless we get a turnaround in the situation in Ukraine and Russia, that the line of least resistance is for the euro to go lower. And I'll tell you why. People are talking about the ECB raising rates by 25 basis points next week and then going potentially 25, 50 at every subsequent meeting. Really? In the absence of any fragmentation tool and power costs that are continuing to go ever higher, is it really credible for the ECB to hiking rates into what is likely to be a recession? I think it's highly unlikely unless they deal with the fragmentation problem in the euro area. And I really wouldn't want to be in Christine Lagarde's shoes right now because ultimately they're in a no-win situation. And I can see much more pain for the euro if we get to move below parity, which I think is inevitable.
Well, thank you, like always, for joining us today. Michael Hewson, Chief Market Analyst at CMC Markets. We'll definitely have you back on, Michael.
Thanks a lot, guys. Have a great day.
You too. All right, let's keep it going here. Looks like Dennis is still kind of working those positions, and I can't blame him. There's a lot of movement going on.
I can come in for a minute. I mean, what are you going to do? The whispers were all right. We started selling off. We sold off 100
Did you see a number
points.
in those whispers? I wonder if the fake report that was out there was right.
That's what I'm wondering. Seems to be, Mitch. Yeah. I mean, it spooked me to go neutral, which is good because I was leaning bullish. So that's the one good thing. We're getting hit. I'm still hoping a little bit of the Joel Elconin scenario. Go back to those numbers because I was listening to you guys while I was trading in the background, but I couldn't process because I'm trading so many things. Okay. Back to the numbers you were showing at 8:30, though. You were breaking it down. You ran into it, and you said something very important, that a lot of it was due to the gas prices.
Yes,
a lot of this. Break down into that. And obviously, we're not economists here, but where a lot of the inflation happened was again with gas.
Yeah,
and we know gas prices are coming down here now. So if we're looking for the Elconin silver lining, it's that maybe the inflation and some other things starting to slow down to a certain extent, and we know gas has already come down, but it lags the data. So that's the scenario where this dip would get bought, is if they really read into that. You've got two numbers, Joel. You know that 372, 373 on SPY. So
Yeah.
you're bouncing off of that area where you think you should bounce off that area. So, can we buy this dip? Part of me thinks it might get bought, but I'm not selling it because one, we were 390. We started selling off 100 points on the Whisper. Now another 60 handles. We're down 160 handles on the S&P.
Is it priced in, right?
Is it priced in? That's the
It's
question.
like
I
you
mean,
start
obviously it
asking
wasn't
yourself.
completely priced in. Is it priced in now? Hard to say. I still think if I'm buying stocks, I'm going to go away from the direct hits. Like I'm going to probably go into tech, where that can be to a certain extent more recession proof, because to our last guest points as well is this number is absolutely locking in 75. Forget about the 50, and are we going 100? That's the question at this meeting. They might.
I have
So
another, I
the
think,
Fed still
important.
has to be aggressive because they don't have the data. But reading, between and really digging into it, this has a lot to do with gas, and gas prices have started to come down. I mean, oil is getting hit, it seems like, here every day. Oil down here again, just a little bit here this morning, but we've been hit pretty hard. So that's the silver lining. Whether we really buy this dip, it's anybody's guess, I guess.
I have a question for you, Dennis. We've been talking about growth trades, right? How does this affect the growth trade?
Those ARKK is getting hit really hard here right now. I think if I was actually to come in, I think the growth tech, if you get down there, 40 is great support on ARK. I mean, I think there's a bounce trade potentially here. If I was buying stocks on this number, and I might be, I think I would actually be buying the growthy tech stuff, because that stuff's going to hold up better in a recession, believe it or not. So, I mean, I'm not jumping into everything that's just burning cash, but I think I'm leaning more towards buying tech as opposed to leaning to buying cyclicals here, because recession seems inevitable at this point. So, and obviously cyclicals get hit the hardest, which is what we've seen in the last 2 months. So I think maybe more of the pain trade's still there, but more inclined to buy tech. I'm hoping the Joel Elconin silver lining scenario comes to fruition here, and they say, hey, it was mostly gas prices coming in.
Food.
Maybe we come in and start buying this.
Yeah. Did you go? I mean, how about that head fake, Dennis? I mean, what kind of algo? Remember
Yeah, bring up the chart, Joel, because I was listening to you and I was like, oh, it's a good note because you said it 10 seconds before. And then, oh, no, it's not. I mean, they gambled wrong.
The bull trap.
Somebody gambled wrong big time.
I know.
Look at what the move was, that head fake, Joel. And a little bit to do was, you want to know something crazy? On SPY, at 8:30, we were 3 points wide on SPY. I've never seen that.
Really?
So if one person, I'd like to know the volume on that candle. It would just take a couple of buyers, and it would literally, if it was just a couple of buyers would just buy, if you just set a buy order at that moment in time when everybody went wide, you're buying at a really bad price. So you got to really watch buying around these 8:30 numbers. I mean, or sending, or just, lifting the offer. Yeah, SPY on the number I was looking at, it was like 382 to 385. It's a long time, but only for a moment. And then they started hammering the bids, but it was wide, and that would be equivalent to 30 points wide on the S&P on the 830 number. It shows you how the algos just get out of there. They're not providing any liquidity whatsoever on this 830 number. I did too. I cancel as well. And everybody that's smart is canceling because you don't want to get picked off. And then obviously if you had a buy order coming at that moment in time, which probably is the case, just a few buys that would jack it up. And then the number came out and they just hammered bids.
Let's see here. And right before the night, I don't know if you were still on or not. I said, we're 30 points from yesterday's high, and we're 30 points from yesterday's low. And they just there was nothing in there. On the on the 8:30 bar, or the 8, oh no, that's 8 o'clock. Let me get to the 8:30 bar, because there had to been the 8:30 bar, only like 40,000 shares traded in the SPY, and then the 8:31 bar was closer to 500,000.
Yeah.
So wow. Yeah. I mean, sometimes to try and play those with stop limits, to catch something like that. But you would
Stops are the most dangerous thing to use when you have no liquidity. At that 8:30 number, you have no liquidity, and you have less liquidity even right after. You have less liquidity right now too. I mean, as a market
until
maker,
the
you're going
open.
in there. You're not giving yourself a 2-cent market or a nickel
Nope.
market here. When the markets are moving around this volatile, you're going to widen it out. This is market maker mechanics. Joel's a market maker. I've played a market making role in the markets for 23 years. When you're wide, when there's risk in the market, you widen the quotes or you get out altogether. And in the
I gotta
case of
hop. I
that
gotta
8:30
hop
number,
here.
they got
But
out.
man, I should have read this note to you guys. I have Arthur Bass coming on from Wedbush, and it's open up. Everybody hop over there. He's in charge of their fixed income, and he sent me his note from yesterday. Damn the recession, full speed ahead. And he basically spelled out what was going to happen with the CPI data. Like to get his thoughts now, so I'm gonna hop off and jump in there with Arthur. So everyone have a good day. Triple D, I'll catch in with you later. I don't know if we're gonna take out that pre-market low. Not banking on it yet, but 37.52 is looking pretty
I'm
good.
hoping your scenario that they actually come in and say, hey, this wasn't that bad. When you really dig into it, it's not good. It's not. The problem is the Fed's plan isn't working yet. We're still not seeing, inflate. We're still seeing 9.1.
I want to
just
point
a
to a
number that gets a
positive
million
here.
headlines. He didn't want a 9 on it.
Before you get out of here, Dennis, I want to point to a positive, at least that I'm seeing in the report data here, is that new vehicles and used car trucks, that went down. Okay, and so
because nobody buying.
that could be the demand destruction,
right now.
And so at least the inflation in that area is going down. At least that's probably about the only one that I could see really ticking down there. But definitely keep on watch, guys. All items increase there, less food and energy. And when the core CPI is still going up, that's what a lot of people were watching to see if that changed. The core could have gave us signs that, okay, excluding what the Fed can actually affect, it's coming down. But it doesn't seem like the Fed is affecting the inflation as fast as we all expected it. All right, Dennis, go ahead. Have a lovely trading day. I'm sure there's going to be a lot of action going on out there.
Part of me wants to buy the dip, and part of me says, are you crazy?
Are you crazy? That's the story of
have
being
fun,
a trader
everyone.
and
Have fun
investor
with it.
in
That's
this
what I
market.
say. Don't get too, if you're trading, don't go crazy and going all in, small bets, because you can live through small bets. That's how I'm approaching it here.
Like always.
Okay.
Thank you for coming on, Dennis. Like always, guys, this is just for informational purposes only, not to be used as investment advice, and opinions don't represent those of Benzinga, and hosts and guests may maintain positions in the security discussed. But come on over to live trading as we try to trade this live action. I was 2 for 2 yesterday, going to try to get 2 for 2 or 3 for 3 again. Let's go. You guys know I like to knock it out the park. Let's go see what we see in this market and see if we can get a fastball right down the middle, because right now looks like they're throwing the curve at us. We'll see what happens. Hit the like. I'll see you guys on over on live trading. And like always, let's keep it going right here on Benzinga.